In this interview, I spoke to Robert Levitt, who's a wealth manager based in Nice in the south of France. Robert helps Americans who've moved to France to sort out their tax and investment problems. He has more than 40 years of experience in international wealth management. He's a CFA and a former hedge fund manager. In this interview, Robert talks about the shocking number of Americans who are leaving the US and the mistakes they make when they come to France.
Our phones just are ringing off the hook, as you can just, like, we've never seen this level of migration out of the U.S. and the reasons they're changing. In the beginning, years ago, we would find people who were contacting us mostly because of FATCA and the laws had changed, and they became aware that many of the things they were doing were not in compliance. They were investing in products that were just completely disasters from a U.S. tax point of view. But since they hadn't been reporting their U.S. taxes, nobody sort of knew. And it was an education process. People didn't know they couldn't do it, and they didn't know what to do when they had that problem. So this, has this knowledge and understanding and competency is dramatically improved. The other thing to focus though on is the reasons people are leaving.
Yeah.
They were moving because they were getting married, they were going to university, and maybe taking a job. Today, what we're seeing is a large number of people who are retiring, many of them retiring very early, and really upset at the situation. I'll ask people, why are you leaving? And they'll say, well, have you been reading the news lately? It should be obvious. So it's a question of the divisiveness of the American society, and people are just, they're changing. And so the question now used to be, how do I get to America and build my fortune, the American dream? But today it's the opposite. It's how much money do I need to get out of America? So the dream has reversed, right? It's no longer about going to America. It's about leaving America. And this is a very, very big change. People want out at all costs. And some of them are actually coming because they're finding the U.S. so expensive. And the biggest issue is healthcare.
Oh.
The system of healthcare in America is really becoming quite challenging for a large number of people, and they're finding living outside the United States to be much easier on their financial situation.
So, Robert, most of your clients have got about 1 million or more in assets when they come to France. What about people with smaller amounts who are looking to buy mutual funds? Because a lot of the people I've spoken to have said that they're restricted from buying mutual funds in France if they're American.
Okay, so let me cover one thing which I think is important, is if you are an American, you do not want to bring your investment assets to France. That's just for sure, because French investment products, French product vendors are very unsophisticated. The market here is not very sophisticated. The fees are very high. The transparency is almost non-existent. So you don't want to bring your assets to a French bank, for example, or a French financial institution. They don't really want you anyway, because they have to comply with a whole set of rules and regulations, which they're not really trained for, and they don't really understand. With the basic rule of European regulation. So you have European regulation, U.S. regulation. European regulation regulates both products and the clients. U.S. regulation does the same. They regulate the products and they regulate the clients. The challenge becomes when you want to have a U.S. product, which is regulated in the U.S., sold to a European client, a European buyer, which is regulated in Europe. So European regulation says that any product sold in Europe must have a sort of prospectus, which says three things. One, what the investment is. Two, what the risks are, and 3, what the expected return is. 3 pages, simple, basic information. It seems obvious to anyone who listens to it that this is a very good proposal. Versus in the US, where you get 1,000-page prospectus of legalese that nobody reads anyway. The problem is that US products under SEC regulation, and the SEC says you cannot project future returns. So Europe says description, risk, return. US says no return. So therefore, a US product which doesn't give you the return will not qualify for SEC, for European treatment. So you have a mismatch between the two regulators: product regulated on one side, client regulated on the other, and this is why it doesn't work. Now, you can avoid that kind of thing if you have an IRA, a retirement account, because you can buy a European investment product, a European ETF, a European fund. You can buy basically the same products in Europe as you can in the US. They just make a clone. For example, an S&P 500 index fund trades in the US, but the same product trades in Europe under European regulation. But then you run into the difference of tax systems. The US tax system says all investment products must pay out all dividends, capital gains on an annual basis. Well, the European investment products are not under the same basic structure as the US products. So they don't meet the IRS definition of what's an acceptable product. So you can't buy the US product because it doesn't comply with European regulation. And you can't buy the US product, the European product, because it doesn't comply with IRS regulations. Hence the problem your clients are seeing, or the people you're talking to are seeing.
So they just don't buy funds? Or do they just, if they already own funds in the US, for example, through a US broker, they just leave the money there?
They can. The restriction is on the purchase of the fund, not on the holding of the fund.
Okay.
So if they do that, if they own these products before they move to Europe, they can maintain them. This is true.
So I think you said earlier that a lot of Americans aren't prepared at all from a tax and investment perspective when they come to France. Most of your clients are Americans, obviously based in France or other parts of Europe, but they don't realize the implications of moving abroad for their investment side.
No, and that's primarily because they don't understand that in most countries in Europe, you are taxed on your worldwide income. Just like in the US, you're taxed on your worldwide income. So if you have for example, you have a job in France, that income will also go on your 1040 in the US. So the US taxes on worldwide income, France taxes on worldwide income. There is a tax treaty that seeks to avoid double taxation. So what income is paid in France and what income is paid in the United States. And so some countries are more favorable than others. France, for example, is extremely favorable to US citizens because depending on the source of income, you'll pay the tax in one of two places, which means you can choose which tax system you want to be subject to. So if you have a portfolio of IRAs and non-IRA, so qualified and non-qualified, then you can probably put the taxed unfavorably assets, which would be taxed in France, in your IRA to eliminate the taxes. And in your taxable account, you would use the securities that would be taxed in the US. So in this way, you can control sort of your diversification and your tax structure. This is something that like American investment advisors wouldn't have any idea of because they don't sort of understand sort of this nature. The other major issue is the euro, right? The euro is the currency that you live in most of Europe, maybe except Scandinavia, but in general, you need more exposure to the euro than you would if you were, in the United States. So the products can be different. The diversification is different. The strategy of how you structure the investments that you're making is different. So all of these things combine and can create large sort of wins against you if they're not well thought through. I think that the one issue that I think is really important, which we may have, we need to talk about, is that there tends to be an idea from Americans that they want to retain their existing brokerage firm and their existing brokerage firm arrangement. And this we see this in groups like Schwab, Fidelity, Vanguard, and I really caution people because even though these companies are not licensed in France in particular, number one, which means that the guarantees that they offer may not be, that the government offers may not even be valid. They may not insure your money. I mean, there are all kinds of consequences to lying, basically giving an address. It's not your fiscal address. This is what you said you would do when you signed their advisor agreement. You said in their agreement that if your fiscal address changed, you would notify them. So people then say, okay, I'll move to something like Schwab International, which would sort of accept you. They don't allow you to do much trading. But here's the problem. Companies like Fidelity, companies like Schwab are designed to sell U.S. securities to the world. So if you have an account with Schwab, even Schwab International, they don't have a euro money market. And in fact, from my understanding is they don't even buy stocks on foreign exchanges. So the only foreign stocks you can buy are ones that trade as ADRs in the United States. And of course, as sophisticated investors know, the liquidity of an ADR is a fraction of what it would be on the ordinary share that would trade in the, in the Bolsa Madrid or in the French Bourse or anywhere else in the world. So they're handicapping you. And then if you want to wire money to your bank account, for example, in euros, you can't. You have to sort of wire it to a US bank, which may close you down as well, and then move it with a currency firm like maybe Wise or pay the bank to transfer. So there's all kinds of complexities of trying to fit a square peg in a round hole. And this is what we see. So I think I can appreciate why people like the comfort and security of something that they know. They really need to consider the consequences of these decisions that go far beyond what they have been thinking about before. And I recommend a webinar series from Democrats Abroad that they have a webinar series on taxes and all kinds of different things. And people can watch those webinars and try to get as much knowledge as you can before you make decisions.